Thank you for joining us. As I said before, my name is Dominic Piper. I'm editor of Australia's Paydirt and Gold Mining Journal and your session chair. Bill introduced our panelists earlier on, and I'm sure they need little introduction, so I'm going to fly right through them straight away. To my left is Cameron Peacock from Nickel Mines. Next to Cameron is Dan Locker from Western Areas. Next to Dan is Kath Bazanich from IGO. And at the end is David Southam from Mincor Resources. So thank you all for joining us today. David, I'm going to start with you because you're the furthest away.
Okay.
And you also have a tie on, so I feel like we're much closer.
But I haven't got the tie pin.
Thank you very much. I was hoping you would notice. Thank you.
Yes.
Trying to bring style back to the
Yeah.
Perth business community.
Yeah, very good. Yeah.
Carry on.
David, there's absolutely no doubt that nickel is now firmly part of the battery minerals narrative. In your time, that's developed in your time with Mincor and obviously your time previously with Western Areas. And during your time with Western Areas, you were involved with a lithium play as well. Has nickel's position as a battery mineral changed the way you market the company and the way you interact with investors?
Look, I think, as a nickel producer, we're always, or about to be producer, hashtag ASX Mincor is the code for anyone who needs to know it out there. As a developer about to be a producer, we're always pointing to vision mirror. But I think what the market probably doesn't focus on at the moment is that stainless steel is still booming in China, and over 70% of nickel is still going into stainless steel. But there is absolutely no doubt in terms of its unforeseen trajectory for nickel in batteries. And I was reading an article the other day. I think it was Samsung coming out with a new chemistry where it would be 91%, and it meant that the battery can go for about 620 k's. So I think the change that we're going to see is substantial and something that we probably won't see in all of our lifetimes again. So yeah, of course, we're always talking about nickel and its use in batteries, and investors want to know our views. The Mincor research department is not that significant. It's made up of a few people on the table to the front of me here. But certainly, it's a great news story to talk about.
Kath, IGO has very deliberately positioned itself as a clean energy metals company in recent years. And obviously you've got a deal in train at the moment to pick up a share of the Greenbushes lithium mine and downstream facilities at Kwinana. Is the and battery minerals, has that changed the way the company approaches its marketing, and has it changed the way and the type of investor that looks at the company now?
I'd say it hasn't changed the way we market because we've had a clean energy and sustainable strategy for over 5 years now, and we're very focused on that. The good thing, I think, for us in the industry is that investors now look at us differently, and they genuinely understand and have bought into clean energy. What that means is, nickel producers and nickel plays have got, a premium in the market at the moment because of the clean energy and the fact that people genuinely value it and believe in it now, whereas before it was more an economic play. They looked at the demand and that's where they went. So I think there's been a maturity around that, which means that investors are looking at it differently. We're not, but they are.
Dan, David was very quick to mention stainless steel immediately, and it is still the bread and butter, the cornerstone of nickel demand. Do investors still show appreciation? Do they want to know about the stainless steel sector first, or is the excitement of the battery minerals thematic dominating the discussions with investors?
No, look, I think the current views that we're seeing and the trends is that, look, stainless steel has been around since Dave was a young child. I was a bit older. But the bottom line is that what's forgotten, though, is there's a lot of rhetoric now coming out from everybody regarding the use of nickel in the future. Hydrogen plants, stainless steel. But there's a misconnect between the growth in nickel pig iron, which I'm sure Cam can tell us a bit more about that is actually going to come in and spoil the EV story from basically the class 1 nickel, which is what we do as sulfides. So the view is that, yes, it's there. It was in the forefront, but it's sort of moved sideways a bit. And the fact that nickel pig iron is growing probably to about 1 million tons in Sulawesi by the end of this year, that will almost be totally taken up by stainless steel. So that market is still absolutely necessary to maintain a good commodity price going forward. So we are trying to share that message. But remember, stainless steel is recyclable. It's an absolute green metal going forward. So we will try and, when we get these shocks of what happens in Sulawesi now and again, there was one in February, the market takes a dim view of those changes, and that was, production of matte that is going to go into refineries and produce nickel sulfate. But the bottom line was that was one of the issues. The other issue was the size of the nickel pig iron growth, which comes back to the same old story. Is that going to impact the pricing structure of nickel going forward? And our view is, and I think it's the view of pretty much everybody in this room if you're a sulfide producer, is it obviously is putting caps on things, but the cap is not that bad. So we need to just move over, get on with it, and then the nickel pig iron guys will just do their thing, and stainless steel will grow on the back of that. So both are required. It's not one or the other. It's actually both are required for the big driver in nickel demand in the EV battery market, but also stainless steel is still a very metal in demand for future sustainable efforts in terms of hydrogen production, everything. So we don't see it as a one or the other. We see it as we need both.
Cam, as Dan says, you sit slightly differently to Nickel Mine sits slightly differently to the rest of the companies on this stage, in that you are involved in the MPI sector and not in the Class 1 nickel sector. How different is your conversations with investors? Are they still looking for that battery minerals narrative, or are you resolutely about the stainless steel sector?
Yeah, look, it's an interesting question. It's nice to be able to participate in a conversation about electric vehicles finally. As most people know, we produce nickel pig iron, we sell it into Tsingshan's stainless steel business. In the 2.5 years since we IPO'd, we got a question from every investor we spoke to: are you guys going to participate in the battery supply chain space? And obviously there was the sort of milestone announcement back in February where Tsingshan announced that they were going to be moving into matte. They've signed an initial contract to supply matte or high-grade matte to Huayou Cobalt and CNGR. And obviously, on the back of that, we announced that 2 of our RKF lines are going to be undergo a capital modification that will allow us to supply into that space. So for us, it's nice to be able to sort of straddle both markets now. Like, obviously, Tsingshan is a stainless steel producer. Most of their what they're doing is MPI to feed their stainless steel business, but they recognise that the market is sort of bifurcating. There's these different markets, different pricing structures, and they see themselves as being a material player in that space moving forward. So Nickel Mines was already a slightly different investment proposition, and I think we're going to change again in being able to sell into nickel pig iron into the stainless steel market, which is, as Dave said, it still consumes about 70% of sort of global consumption, but also having that additional string to our bow of being able to sell matte into a battery supply chain.
Kath, can I come back to you? You mentioned that IGO has been has marketed itself as a clean energy company, or had a clean energy strategy for a number of years. It strikes me in the battery mineral space more than many other commodities that ESG requirements and ESG credentials are very important, not only from investors looking for clean energy investments, but also from end users and customers who are increasingly looking to see that supply chain as a low carbon footprint, as ESG credentialed, if you like. Are you feeling that scrutiny? Is IGO feeling that scrutiny from investors and customers?
Oh, I think we're all feeling it from an investor perspective and the market just generally, because ESG, well, the expectations are changing every day, and you can see it in the legislation coming in, but the community and everybody has got to focus on this, and that's very different in my mind to the governance requirements around it. So, you know, if we want to be able to raise capital, if we want to be able to invest, if we want to be able to have a seat at the table and maintain that premium around being clean energy and all the rest of it, we actually need to be listening and getting ahead of the curve on those things. So, yes, definitely feeling it. I couldn't comment as much on a customer side because I'm a little bit more distanced from that, so maybe one of the other guys can comment
Dominic,
on that.
it's probably worth adding that, you know, as mining companies listed on the ASX, we have multiple sources of funding, and we will focus on the equity piece, but it's just as strong on the debt piece.
Yeah.
So, you know, in Mincor's example, we've announced a financing package with BNP and SocGen, so two French banks. So go figure, two French banks supplying an Australian nickel company, but they came up with the best deal. But the important point was there before the term sheet could be approved and go before credit. So credit is normally, in banking terms, a deal prevention department. They'll stop deals getting through or bad deals getting through. It now has to go through ESG. So we had to go through a fairly rigorous ESG process before credit would even look at the term sheet. And obviously, since we've signed the deal, being a nickel company with a low carbon footprint, underground, not disturbing much ground, we were able to tick that box, and also from a native title perspective. So yeah, we need to focus not just on the investors, but debt providers and other stakeholders.
Dan, you've raised money to fund the development of Odysseus at Cosmos. Was it a similar situation? Was it different this time, raising funds for a project development than it was in the past, from an ESG perspective?
Oh, look, as people are saying, it's a moving target all the time. We did an equity raise, so we actually, obviously, were looking at our current shareholders to participate. But there's no two ways about it, that you've got to get on board. There's no other plan that you can go down to say that you're going to try and avoid this. We are fortunate to a point that nickel is one of those metals that's been seen as being green, so is lithium, because we need that energy for the future. I mean, if you look at the number of cars that need to be displaced from internal combustion to get to 2050 or 2040 or 2030, it is all cars have to be changed to electric cars. Now, we can't do that just overnight with no coal, no nothing. We still use gas. We still use a lot of those combustible fossil fuels. So the transition has to happen there. But what we are seeing, though, and this is probably the only thing that is absolute fact, is that a lot of the investors coming out of Europe and a few now spreading to New York, is that they're certainly now looking for that green energy and ESG credentials. And it's not if or what, it is actually absolutely, you need to show it. Not to the levels that some other people, I mean, other industries are doing it, like, you know, the oil and gas, and we've seen what's happening there with the Shell and the rest of it in the courts. But we will, it's not are you getting on board? You are on board. It's how much effort you're going to put into it. Nickel is one of those metals, so we're getting a premium for that already. And we are seeing funds now, these smaller funds, and that will grow unbelievably fast, where they can invest in green energy minerals, and that will be the lithium, the cobalt, the obviously not from the Congo, but and nickel. So we sort of in the right space anyway, but we just have to get on with the rest of the ESG, not just part of it. So, but it's absolutely coming down the line.
Cam, obviously operating and having operations in Indonesia is slightly different to having operations in Western Australia from a political risk perspective, standards perspective. Is that a concern for investors? Is that one of the first questions they ask in regards to ESG?
Yeah, look, it's an interesting question. Probably in early 2019, when Justin and I were doing some marketing overseas, we certainly recognised an intensified focus on ESG questions. Now, the difference with Indonesia is a third world country. It's a developing country. I was interestingly at a dinner in Sydney a couple of weeks ago, and we were having this very debate about developing countries and coal-fired power stations. And everyone knows our operations are powered by coal-fired power stations. And interestingly, our current development project, Angel Nickel, is 4 RKF lines and a coal-fired power station, which we're investing into. And we canvassed this with some of our investors. We canvassed this with Tsingshan. We had investment banks pitching structures to us where, can you carve out the coal-fired power because it's something that investors aren't going to want to touch. But obviously, we've done equity raisings and we've done a debt raising on the back of that, and it hasn't been an issue. And I think what people probably understand and are coming to understand is, the Western economies have had the benefit of coal-fired power for 100 years to develop our economies to where they are today. And if you took coal-fired power out of Indonesia, they'd be nowhere. I mean, there's E, there's S and there's G. And what a lot of people are focusing on is the E, but there's also the S. And there's been massive social benefits to Indonesia by what Tsingshan have done there. I mean, the level of affluence that's spreading out from Morowali. I mean, Morowali 6 or 7 years ago was a remote fishing village, subsistence living. Every time you go there now, you see the level of affluence just spreading out from the park. And that park not only powers the IMIP, but it also supplies power to the whole, community. And so there's been a real benefit there. But it is something that we're focused on. Tsingshan recognise that. I think coal-fired power is almost like a starter pack for a developing nation. But Tsingshan recognise where the market is going, and they've sort of made a lot of noise and are making commitments now about building solar and hydro and sort of renewable energy power. So I think it's not going to happen overnight, but I think in 2 to 3 years you'll see nickel mines potentially being able to say, look, we're now drawing 40%, 50%, 60% of our power from renewable energy, and that's certainly the path that we're going down. But investors are certainly focused on it. Fortunately for us, we've got a single customer, and that's Tsingshan, so they're comfortable taking our product, even though it's powered by the power that they've built. But there's certainly strong moves within the Tsingshan group to make that move into renewables.
Cameron, I'll just stay with you. I want to switch to downstream processing and the options that are in front of the nickel industry. We had, as Bill said, we had the Paydirt Battery Minerals Conference in this venue 2 weeks ago, and there wasn't a presentation from a mining company that didn't involve some discussion about downstream processing, whether they were branching out into it, or they were investigating it, or they'd considered it and rejected it for now. You mentioned that Nickel Mines has moved into nickel matte production as a first step towards integrating yourself in the battery minerals value add chain, a vertically integrated chain. Is that the first step of many for nickel mines, and is it the way of the future for nickel miners, regardless of the product that they're producing?
Yeah, look, Nickel Mines has got started. The name is a bit of a legacy name. We started as a DSO operation in Indonesia in 2009, so we were literally, like everyone else, just digging up dirt, sticking it on a boat and sending it to China. And then, as you'd be aware, the Indonesian government stepped in 2014 and said, look, we don't want people coming in and sort of raping and pillaging all of our resources and all the value capture going offshore. So they brought that export ban in to create a downstream processing industry. And the IMIP and the IWIP are great examples of vertical integration, where you've got Indonesian resources, Chinese know-how. You've got the support of the Indonesian and Chinese governments coming to make the IMIP and the IWP possible. I think moving forward, this is a new step for nickel mines. I mean, obviously we started as an ore supplier. We've moved downstream to nickel pig iron, and we recognised, you didn't make much money. You made a couple of bucks a tonne selling nickel ore, but the value in our business now as a nickel pig iron producer, I mean, you only have to look at our recent quarterlies. Our December quarter, we made $72 million from our processing assets. We made $5 million from our mining assets. So the value capture is in the downstream processing industry. And Jim Lennon uses a great slide in a lot of his presentations where he shows the use of resources leaving Indonesia back in 2013 versus the value, and where it is to today. There's much less tonnages of nickel leaving Indonesia, but the value is much greater because it's been processed and refined. And so it's been a huge success for the Indonesian government. I mean, the IMIP and the IWP have really captured or encapsulated everything the Indonesian government wanted to achieve. It's brought foreign investment to the country, it's created jobs, and it's created this sort of vibrant downstream processing sort of industry. And nickel matt's just another step forward for nickel mines and down that path.
Dan, Cam mentioned that value capture and where the greatest value is for the nickel producer, for the nickel miner. Is that shifting, and does it still stay for Western areas? Does it still stay in a concentrate production for now?
Yeah, look, I mean, if you're in concentrate production right now, which some of us in the room are, you are always going to be asking that question, whether you are getting better value out of the payabilities, which is the percentage of the LME price you get when you give it to a smelter, or should you invest in something? And look, and some people have looked at that, and one of the issues I guess you're dealing with is that currently it's Asia-centric. So China, Japan and Korea are the big end users, your LG Energies and your Panasonics. So they are reliant on nickel sulfate production. Very little of that comes out of Australia, or that's mainly just a bit of matte here and there, goes into SMM refineries. What we are seeing though is that if you've got a smelter and a refining complex, which Jinchuan has got, Nickel West has got, Norilsk has got, Boliden has got, and Harvelta, you're seeing them now bypassing some of the downstream processes, i.e. crystallization, for example, to reduce the cost of the input into the battery. It's a very static margin game. It's almost like, you give me this and I'll come out with this other product at the other end, but look, we'll do a deal on what the value is. So there's not like this, people believe that when you go from a concentrate to nickel sulfate into a battery, there's this huge margin gain. There isn't. It's that thing. So what the refineries and the smelters are doing, like Jinchuan, they are building their own precursor factories that'll feed the Panasonics. The bizarre quirk is, though, that Japan and Korea, which are the biggest combined, probably, battery producers to the world, don't have any nickel smelters. Now, going back to ESG, when we're talking to guys right now, so this is not historical, this is actual conversations, you ask them, why don't you build a smelter? Well, the first question they do is, what new technology doesn't give any emissions? Okay, shall we do hydromet? So there are conversations that you can have with the big guys, but it's slow coming forward. It's happening in lithium in the Kwinana, but it's actually in terms of cobalt, lithium, they're a lot more advanced. We are still struggling a little bit with the OEMs, but we are now probably of the opinion that there is now quite a strong movement from the OEMs, the LG Energies, the Panasonics, to push the miners, and firstly the refiners, to actually get into that game. So we might find that it'll be sponsorship via finance through that sort of end user, the demand for your concentrates. So nickel sulfide concentrates are going to be still in a huge demand because it's the best way to get sulfur through into the sulfate. But the mechanism is still probably a little bit behind the eight ball in terms of those end processing plants and where they should be. Labor rates, power costs, those are the two main, maybe not so much labor, but power cost is absolutely vital for those big processing plants. So can they happen in Australia? Yeah, there's a big debate, not sure. But we certainly are in conversation with those other guys. But remember, the volumes are significant, and Australia, including Nickel West, probably will only supply probably somebody like LG Energy for 2025 to 2030 production. We're talking 300 or 1,000 nickel tons, just one group, and they're growing. So we've got to be on the ball. We've got to follow through these things. And of course, as a producer, we do need to evaluate whether there's big gain or whether you just go into bed with one of those groups. That's the commercial valuation stage. And we're not 100% sure whether that's a must do or is it something you'd like to do for your shareholders?
I think it's a should do. I'm going to jump in some ways.
Absolutely.
Yeah, I think it's a should do in some ways. We just need to look at, the geopolitical environment, COVID, supply chains and all the rest of it. There's risk associated with that, which is giving us a bit of a push to do more in Australia. If you think long term, the next 50 years or something, and we use up our resources, we get into non-economical resources as they stand right now, from a societal perspective, we need to think of manufacturing and bringing things home. So in some ways there's a bit of a should we, as an industry, be looking at it as well, and backing ourselves to do that, to bring it home. And the answer, I agree with you, it's how far down and how do we make that economical, how do we invest in things. So it's not an easy answer, but my personal view is it's a should, and we should try to think how we're going to do that.
You get to a point when you sell concentrates, you get to a point, and Pete knows this, and most of us sell concentrate, and David knows through previous times, you get to a point where you add value. We've already added, in terms of the percentage of nickel price we get since 10 years ago, 10 percentage points. So we are way ahead already. Eventually you get to a point where you're struggling to get a very small margin, but strategically it's a good thing to do. But you're not going to just go in there and get lots of margins back into the system. Hydromet plants are probably what we would probably think will be the futuristic way of LG Energy and everybody getting, and I think that's the conversation they're actually having themselves right now around their own tables in Korea and in Japan, because it's, as you say, they have to move away from emission generating, although chemical plants produce their own little waste pile, but that's something that they have to deal with. But
David, in your project development, was vertical integration and future or potential vertical integration a consideration, or did you take a more conventional approach to the development of Cassini?
That's a pretty detailed answer. No. No.
Would you like to elaborate?
Sure.
Please.
So, we're just a little humble West Perth junior miner here. And so our task was we needed to demonstrate and have a financially viable business for a minimum of 5 years as a starting point. We had a choice where we could invest in a new nickel concentrator, build a new nickel concentrator, then come up with a tailings dam, go through the approvals process and add probably 2 years in approvals and additional cost. Now, we did have some Swiss commodity traders who are quite open to providing some funds for that. However, some of those, they're very good fishermen because they have lots of hooks in their tackle box when it comes to those. So for us, the best solution was, and if you look at it from an ESG, you've got the Kambalda nickel concentrator that had recently gone on to care and maintenance, designed for Kambalda ore, which is our type of ore, to go into a nickel concentrate, which if you're a golfer, is from our operations is a driver and a 6-iron away. So it's a nice little par 4 away from our operations, so very little transportation costs. And because we'd negotiated the contract with BHP where we're actually selling concentrate rather than selling ore, we get further along that chain, but ultimately our product will go into a nickel sulfate. And so when going back to my earlier comment about negotiating with banks and going through the ESG, I believe we probably got a discount on our ultimate interest rate because of that. And so there is actually an economic benefit to being part of that supply chain.
Dan, you mentioned just before the payabilities, and it's been a constant issue down the years. I don't know how many conversations I've had with yourself or David or Peter about this issue. You said that you've made a big jump in the last 10 years, but we're at the margins now. Is there more disruption that the EV market can bring to that conversation yet?
Yeah, like if somebody walked in the door today and said, "There's 90% payability for your coin," I go, "Thank you very much. Sign it here," because that's when you're getting into hydromet levels, and that's the difference between smelter losses, refining, the extra work, where hydromet does that work for you. So you get that value back from that technology. And so there is actually an economic benefit to being part of that supply chain.
Mm.
So that's what we would say. If I was wanting to look forward 10 years and selling concentrates, it's better for you to sell it into a hydromet system than into a smelter system, right? But the capital cost of building that infrastructure, let's say, I don't know, 350, 400 million in Vietnam or in Korea or in Japan or in all of them, that may be the end game. But the problem we have right now is that nobody's doing it right now for concentrates. So probably internally within the Rilsk maybe, and within the Boliden system within the Rilsk and BASF. But if you went to the market like we are doing with Odysseus in the next probably month or so, you've got to look at the economics of where you're going to get money to run the mine and pay share, dividends on what's happening today in the world. And at the moment, we're finding that the OEMs are slightly behind in nickel world compared with lithium and the other sort of green metals. So we try to accelerate that, but these are pretty tough conversations to have. You can't actually go into the country. You do it on Zoom, right? And you can get misunderstood. But I think the acceleration and with that EV rhetoric is happening, and I think it's going to get much, much quicker. So we won't probably get Con into a EV sort of precursor factory probably in the next 2 years, but over the next then 15 years, we will. So we have to play a commercial game up front to get revenue, to run the business, and then lock in the longer term facilities. And those conversations, it'll take you 2 to 3 years to build a smelter or a hydromet plant today. It doesn't matter which country, probably. And the good thing, though, that we're seeing now is with North America and Europe starting to also get in on the debate about strategic metals. It's absolutely brilliant timing, because when stainless steel was humming, you needed 3: Europe, North America, and China. GFC came, China was the only one booming, and we saw where nickel went to during that period, but it was okay. When we came out of that, 2011, we were running at $11.35 a pound, which is compared to with today's great price, right? So the macro positioning right now is looking really good. We just have to, as David says, little miners in the West here, have to get our position where we'll only be a small part of a jigsaw puzzle to somebody like Panasonic, but if you're in the right jigsaw, you'll get those payables up into those high 80s, and that really is about as best as you can do, unless you own one of those plants.
Kath, IGO is preparing imminently to become join the lithium supply chain and vertically integrate itself in there. Do you think there'll be lessons to learn from that integration to apply to your nickel strategy down the line as well?
Yeah, definitely. But we have done some downstream work, and we came out probably 18 months ago with that, and we haven't parked that necessarily. I suppose it's parked in a way, but it's still always in our mind, and we've got a really good opportunity there that we would like to leverage off of at the right time. So I think that we've been thinking about it for at least 3 or 4 years. But that Kwinana plant will be a very interesting proposition and learning for us as well. So you can always learn a lot from many things. Yeah. So definitely.
Thanks. Cam, the step into nickel, Matt, you said you did it almost at the behest of Tsingshan and its own moves. Do you see that happening more in Indonesia? Will there be other stainless steel producers that will look to diversify their production out of Indonesia to meet that growing demand from EVs?
Yeah, I think that's a real possibility. Obviously, there's a lot of supply coming out of Indonesia. Tsingshan came out back in March and said we're going to do 600,000 tonnes this year, 850 next year, and 1.1 in 2023. And that sort of spooked the market, and we saw the LME price drop, sort of $3,500 in 3 weeks. I think moving forward, though, process technology is going to determine how many people make that switch. It is possible. Tsingshan had always said it was possible to convert a Class 2 nickel into a Class 1 nickel. It was always about the conversion cost. And Tsingshan have obviously been running trials within the industrial park for many months. and they've now sort of cracked the code and think that they can do it at a commercially viable level. And so if Tsingshan are going to do it, and they've started small, so there's 40 lines operating within the IMIP at the moment. 10 of them have been signed up to do the conversion to matte. As I mentioned earlier, stainless steel's their main business, so they've got to make sure they've got enough nickel pig iron to service their stainless steel business. But I think increasingly, with their partnerships they've got through Asia, they will, they've got a 100,000 tonne contract with Huayu, or 60,000 tonnes with Huayu, 40,000 with CNGR. So this is dipping the toe in the water. I think if those contracts are successful, you might see more contracts being signed in the next couple of years, and you'll see other Indonesian players, most of which are Chinese, starting to transition into Class 1 battery metals as well. I know Indonesia, just going down the integration or vertical integration path, they've gone from being a producer of nickel ore to setting up these vibrant downstream processing industrial parks, and I know there's further ambitions to turn Indonesia into a hub for electric vehicles. So they're looking to go, the full hog down that pathway. So I think you're going to only see more of it moving forward.
Thanks, Cam. I can hear most of the cutlery is stopped being clinked, and that suggests to me that you're ready to ask some questions. We've got some roving microphones around. Have we got any questions for our panellists from the floor? We've got some exalted company in the room today, so I'm sure there's some. No, we needed another couple of glasses of wine before we get to that stage. Obviously, back to me then. I want to change tack slightly, and Dave, can I start with you? You're building a mine in Kambalda. I'd imagine it's quite a tough period to get a workforce. I know we had a conversation yesterday about this very topic. Is there pressure on Mincor to find the requisite skills to build the mine, and how are you going about ensuring that you do have the people to build a project?
Yeah, look, timely question, difficult question to answer. Well, actually, it's not that difficult. Mincor itself, we've, over 2.5 years, we've got a zero turnover of people. So that must mean that we're doing something right there. But we've actually been able to attract a number of very highly experienced underground miners, surveyors, and geotechs to our company. And it's actually been quite a humbling experience. I didn't have an appreciation before joining Mincor of the alumni that existed out there, especially in Kambalda and Kalgoorlie and afar. And so we've had people who have actually wanted to come back and work at Mincor, which we've welcomed with open arms, but we've also been patient. If I think about our geotech engineer, our senior geotech engineer, she was someone that we targeted 12 months ago, and we wanted her. We just had to be patient and work hard, and eventually she gave in and left a glittery gold miner in Kalgoorlie and joined Mincor. But we're certainly not going to put our head in the sand. I would expect that our people internally are getting tapped on the shoulder. And then if I think of the blue-collar workforce, so we've got 30-odd people within Mincor and about 100 in our contracting workforce at the moment. And yes, it's difficult to get jumbo operators whose rates are going up significantly. So if you've got children, send them into jumbo operations training. Some fairly good money to be made there. But it is quite mercenary. People are leaving in that skilled blue-collar workforce for a few dollars an hour elsewhere, and we're all fishing from the same pond. And the pond is getting dry. From a Mincor perspective, and especially with our contractor selection, our contract is the most important contract to that contractor. So we get due attention, and we're on time and on budget to date, and we're over halfway through building. But it's not without its challenges. And the anecdote that I gave you the other day, which I'm sort of happy to share, we're employing a graduate mining engineer, and he's graduating from WASM at the end of the year. Again, nurtured that relationship for over 12 months. Gave him a day a week as working on some ventilation studies at our northern operations. And so we were in the position to offer this person a role, and as you would expect, graduate mining engineering salaries are now over 6 figures, and which is a pretty significant starting wage. And so we're about to offer him the role, and one of these ugly iron ore miners who are repeating sins of the past basically offered him nearly 50% more. So if you think that it's $100,000, add 50% for a graduate mining engineer. Now, I'll probably get myself in trouble for saying this, but it's not the first time. So I said to the COO, I said, well, Dean, go back and have a chat to him, and because you can understand a young person graduating, when you've been living off the bones of your arse, you think, oh, geez, look at all this money coming, I've got to take that role. What we reminded him is that if he went to said iron ore miner, well, it's not real mining, it's just dirt moving, and he'll be busy talking about his feelings all day, and doing 55 safety observations, and maybe might get to drive the resident manager out in the ute out to the airplane, or he could join Mincor and be mentored by 2 general managers. One is one underground at Porgera, one is one run underground at Mount Charlotte. Get your ticket very quickly, but we're not going to match that offer. Fortunately for us, he joined, which is fantastic and a great reflection on his character. But what it concerns me is the greater industry issue. And that's just a small example, and I'm sure there's many others like that.
I hope the dirty iron ore miner was not the same company that's buying your concentrate off you. You got you going on.
Would I be that silly?
Dan, have you seen a similar situation at Odysseus?
Look, there's no winner here, so it doesn't matter who's...
Sounds like the engineers are winners.
Look, that's a short-term gain for long-term pain, right? Because, at the end of the day, we're in a shortage, right? And I was talking to somebody at the back of the room earlier on. It doesn't matter whether you have an engineer, because if you can't drill and blast a ton of ore, it doesn't matter how many engineers you got, because they don't do that work. The actual operators do that work. And currently, we just don't have operators. So I was saying to somebody that we should tell WASM to put all their 3rd-year students or 4th-year students for a 1-year sabbatical to learn how to drive a bogger, jumbo, and a long-haul rig, like what we used to do in the old days, because that's what you have to do. You have to do underground time, right? But the bottom line is we're in a spiral. And Rach, my HR lady here, is telling me every morning, we've got to pay more, Dan, we've got to pay more. And I'm one of those guys, if you know me, no, we don't want to pay more, as David said. You can get people across the table. But look, when you're in a boom cycle, or whatever, boom or whatever cycle it is, we've got to train people, and the fitters and the boiler makers and the electricians are as important as engineers and surveyors, because you can't drive a truck or move dirt if there's no truck. So we've got a big issue, bigger than just WASM and not getting people from Camborne or whatever. But as a bottom line is, why do you think they're jumping ship? For money. So if everybody's willing to pay them more money, like the big players, we've got to get an agreement through the council or whatever, the government, to say, we've got to have some kind of an agreement on what we're paying people, because otherwise, Joe will pay $50 more, Bill will pay $100 more, and we'll just have a revolving room of people, and we'll all suffer, except for the guys maybe on the top of the bunch. So, but at the bottom line is, Odysseus is going really well, coming back to your point, because a jumbo operator, which worth is, dollars, wants meters. And if your project can give that operator this through meters being blasted, he'll bring his own crew from Cairns or Queensland or whatever. Or Cairns is in Queensland, sorry. They will bring their own people with them. And so far, if you've got an operation that can provide them with the physicals to make money, because they're not doing it because they love you as a company, although maybe some people do, but we're in a bit of strife at the moment, full stop. And whilst Odysseus is kicking great goals, the other operations which need long-haul drillers and bogger operators, I can't say the same thing. So it is hurting.
Kath, I wonder if you've got a slightly different point from Dan. He said there,
Hang on, we're not going to argue all through the...
companies, people don't fall in love with companies or come and work for, and it has been a problem for mining in the past. It's seen as to Generation Z or Generation Y, or it's seen as a somewhat dirty business and an old-fashioned business. Do you think there's an opportunity as a clean energy miner for IGO to turn that perception around and perhaps attract people because of the company values and because of the impact that you're having on society?
We've actually seen it already. It's amazing the association that our people have with us because of that sustainable energy and clean energy and all the passion. You know, people are going to jump ship for money and it's competitive and you have to do what you have to do to get into a situation. But none of us want to get into a war of pay. So at the board level, we're actually sitting down and doing deep dives on this risk and working out what we can do as an organisation to attract and retain people and talent beyond the pay, similar to what Dave was saying here. And, you know, it's working conditions, it's association with a purpose, it's adding the little things that make a difference, making it more family friendly, looking at rosters and all those sorts of things, and trying to not make it purely a money play, because we all know that the economics don't work, the production suffers, but it's not as safe, our people aren't as well, and you end up with a much bigger outcome that is poor for the organisation, our investors and our stakeholders. We're feeling the pressure across the board, but we're feeling a hell of a lot of pressure in exploration as well, and we know our people are getting tapped on the shoulders, and what we're trying to do is get them to stick around for the bigger picture and also for how the values and the purpose. Not an easy proposition, but it's the right proposition.
Cam, what's the situation in Indonesia? I'd imagine there's a lot of differences in many of the dynamics.
Yeah, no, very different. The IMIP currently employs about 40,000 people. There's 40 operating lines there. Our individual projects, H&I, which is Hengjaya Nickel and Ranger Nickel, each employ about 600 people. They work over 3 shifts. But, you know, part of the commitment that Tsingshan made to the Indonesian government when they moved to Indonesia was to, you know, get that social, or bed down that social licence to operate. And they came in and said, we will do X, Y and Z, and part of that will be employing local talent and training them up. So there's about 3,000 Chinese that work on site full-time doing all the construction work. Tsingshan's advantage and speed to market is they basically prefabricate everything in China and they just bring it in and bolt it up. Bit like a Meccano set. And then, you know, they've got, you know, 38 to 40,000 locals that they're training up. And so that's part of their commitment to the Indonesian government. Obviously, the wages that the Indonesians are pulling are nowhere near $100,000 a year. It's, you know, far, far less than that. But, you know, Tsingshan have made a commitment to pay above the award the award rate in Indonesia. And, you know, I think for a Chinese company coming to Indonesia, as I said, that social licence to operate is very important, and they made that commitment up front to the Indonesian government, and it's been, you know, very well received by the locals. Yeah.
Thanks, Cam. We've got time, a couple of moments. I'm sick of doing all the work. Somebody's got to do some more work. Oh, my colleague is going to do some work.
We have a couple of questions from the online stream. Actually, same question, 2 questions from the same person whose name is Resourceful. Does the increased focus on nickel in EVs change the discussions you are having with off-takers, both existing and new? And the second question is, which of yous is going to buy Chalice? I think it's from Jeff Fennick of Marrickville.
I don't think any of us can afford Chalice at the moment, so...
IGO can.
IGO can, yeah. Yeah, look, obviously, I'll answer the first part because I won't talk about EV. I won't talk about the other... I'm struggling with that one a little bit mentally. I think that you must have a conversation because the way that we are seeing the marketing and the trends going in the market right now, but I did say earlier, it's a bit slower than what we probably would like, but it is accelerating. If you can see your product going into the end game and you can link yourself to that particular party that's doing the EV, the precursor stuff, then I think you're on a winner. From a marketability, sustainability, you're actually ticking all the boxes. It is not that easy because there's many steps in nickel concentrates to get to that point. But like with Kwinana, if you're putting it into the smelter in Kalgoorlie, like all of us are, well, except for Cam here, we know they're producing sulfate, but it's not all sulfate because it's only 20,000 tons. So, but if you can get your company in that logistical chain and you can demonstrate it through commercial terms, I think you're on a winner.
David?
Oh, you want to know about our takeover of Chalice?
Yes.
Oh, okay.
Will it be all script?
Oh, we're only 90% behind their market cap at the moment. So,
So there's a capital raising involved.
and look, I am the worst person to take investment advice on other than investing in Minkle, which you should do. But outside of that, I'm the worst. And someone told me, why don't you buy some stock on Chalice at $5? And I said, you're dreaming, they're overpriced. And they hit $9 the other day. I think they come back a little bit. Look, it's a magnificent looking potential deposit, but what it does show is that the market is open for good discoveries. If you can make a discovery, and hey, let's face it, Campbell's where the most nickel has come out of Australia, and only 12 million. See, I'm turning this into a Minkle story, and only $12 million was ever invested in greenfields exploration for 20 years since Western Mining sold that ground, and so. The opportunity set, if you can make a discovery, it shows how much capital is there and how much leverage you can get in the market if you make some. If you've got nearby neighbours there at Caspin, which have taken off on soil geochemistry. So it doesn't take much.
Thanks, David. Did we have any other questions? Well, no. Well, it looks then like we've hit the 59-minute and 50-second mark. So I think our panellists have earned themselves a little bit of a break and a drink. We have got one more question, have we? Sorry, I didn't see. Apologies.
I've just got one more last question. Being a broker from the sell side for 17 years, and obviously broking Jubilee, which was one of the best nickel stories that I ever broked. Because it was so simple, okay? Kerry, make money, put it in a bag, and do a dividend every 2. He was the biggest shareholder. And this will be an individual question. Why do investors invest in your company now? And this is either because we used to do it on PE, cash flow, and with all this ESG, that seems to have gone out the window, basically. Is it for discovery? Is it for grade? Is it for PE? Or is it for ESG? Because it seems to be very much all the other stuff has gone out the window, all the thematics of good balance sheet, things, and it all seems to be about ESG, about getting the big institutional investors to buy your stock and push it up. And is that the focus of where do you think that people for your stock buy your stock?
Cam, do you want to take that?
Yeah, I'll start with that. I think nickel mines sort of burst onto the scene in August 2018 when we IPO'd. We've obviously been around since 2007 as a private company and have been in Indonesia since 2009. I think why people invest in nickel mines is because we offer something a little bit different. We actually pitch ourselves as not being a mining story. We like I said, our name's called Nickel Mines. We've got a legacy mining operation, which is still a key strategic part of our business, but we offer investors exposure to the nickel market, but without all the mining associated risks. I mean, we could shut our mine down and it doesn't affect our processing assets. We don't have any mine life considerations. Sustaining capex is $5 million every 5 years. We don't have to do underground development drives. So we're giving you exposure to the nickel price, but with an industrial style cost base and without all those sort of mining associated risks that some of the other miners in the room have to experience. So I think we will, after we get through our growth phase, will be a cash box. I mean, we did $200 million of EBITDA. In Angel comes on board. Sort of the middle of next year, we'll be doing about $400 million of EBITDA, and there will come a point in time where our growth avenues have dried up, and we could be a massive yielding stock. So we're a bit of a cash box, but we still offer that growth profile at the moment. But we allow investors, as I said, to have exposure to the nickel market, but without all the normal mining operational risks that come with it.
Dan, we may as well work our way down.
Okay,
everyone's going to be as tight as Cameron.
I'm glad that Mark brought that up, because Jubilee is where Odysseus is. So we're very happy with that, and we hope to do exactly what Kerry did. And nickel was $53,000 a ton of the day. But yeah, best dividend stock for many, many years, and very happy shareholders. But yeah, great area. Look, I think that as those new funds, the green energy funds, are coming in, there's a lot of them, as I said, in London and Europe, and then especially in France and a few other areas. But New York is getting on board as well now. They're looking for a growth story in the green metals. So if you're just going to go and do the same thing you did last 10 years, they probably sitting on the fence because they're just a commodity play. If you can demonstrate a growth in your production profile and then going into the EV thematic, they are buying in. They've got to buy into the EV thematic full stop. And not everybody's there yet, but the guys who've got the green funds, and we're seeing that switch happening right now, they are investing in your company for that future thematic, and that your metal and your company will follow through that. So look, the other thematic we're getting a lot is consolidation in nickel land, which, some people love that story. And there'd be a mega group that will run all of the nickel, other than Nickel West. But that's a bit of a joke. But the guys are moving in thinking, will you be around in 2030? We will be. Not sure about everybody else, but these guys will be. But at the end of the day, if you've got nickel into that at bigger capacity we have today, in the future, that's what you should be investing in a group.
Kath?
Well, I'm an accountant and I'm very simple. So for me, the numbers are the numbers, and the investment proposition is the investment proposition. The 20 years ago for me is that ESG and the social conscience that we have in the market means there's that future of the world and that future of our society is very important, which actually will help drive our businesses, because nickel's fundamental to that. And therefore, in my mind, very simply, the principles still apply. ESG is fundamental and really important to society, but it needs to fit into the economics. The other thing to bear in mind from an industry perspective is that, we're very fortunate right now because we have a product which is wanted and needed in that space. So there's a lot of extras that come from that. But the demand for nickel in the next 20 or 30 years is going to grow significantly. And therefore, if we want to stay at the forefront of that, and we want to be around in 20, 30 years and have a booming industry, we need to invest now to meet that demand. And if we don't go and do that investment now, then there is a risk there'll be substitute technologies, and the opportunity that we've got today won't happen. So I think that similar to what Dan said, long-term play, need to work out how we're going to get there and keep on focusing on this, because we can't lose that opportunity. And, we need to take, in my mind, we need to take it seriously, because that's what society requires now. Yeah. And we need, and we can capitalise on that more than an iron ore company, more than a gold company and so on, but we've got to keep it, we can't let it go.
Dave, you've already told us we should invest in Minco.
Yeah, okay. All right, I'll keep it. First of all, I'll offer Mark a hug for being a broker for 16 years. I feel very sorry for you. But we've forgotten the G in governance, and we should point out that Mark works for Bell Potter and does all the ratings for nickel mines, so that seems like a planted question, straight to an investor relations person. But for us, and I completely agree, Kathleen, it gets back to the numbers, and you can have the best ESG in the world, but if you've got no deposit, there's no point in being the best ESG in the world. So you need to have the economics, and so from a Mincor perspective, it's high grade, simple story, low capex, low costs, make money and do it responsibly. So it's a pretty simple proposition, but then once you've got that economic deposit, then you need the ESG elements, modern slavery, all those things that are now demands on directors, because demands on directors are far greater today than what, we could go off into a whole different topic there, than what they were 5 years ago. Used to be, noses in, fingers out. There's sort of a little bit of noses and fingers at the moment. And so, look, but that's a whole other topic on governance, which you didn't get to today.
Well, thank you very much. I had another 3 or 4 questions, but the audience were asking too many questions, so I never got to a lot of them. Thank you very much, ladies and gentlemen, for listening in, which what I'm sure you'll agree has been a fascinating discussion. Can you just join me in thanking our panellists for their insightful and at times inciting commentary?